Hello, everyone. My name is Rufas Kamau, and welcome to the first episode of the Market Pulse series. So, in this particular series, we'll be focusing on what's happening in the current markets. It's a little bit different with what we have been doing in other episodes. Remember, in the previous episodes, we used to do the novice to pro series, that is beginner stuff going through to professional level stuff. But for this one, it will be a little bit more specialized. So each and every week, we are going to have one specific topic. We try and have a combination of both. One, we cover some beginner stuff, getting started, getting set up, and also we do some live market analysis, trying to understand what is happening in a particular asset, the direction the asset is taking, and after that, we try and understand the key price levels and potential market movements. So feel welcome to this session. We'll be having a lot more to cover. So at the same time, this one will be a little bit different. So as we go along the series, we'll be having a couple of guests where we discuss key topics happening in the markets. And as we discuss, we get to share more information and hopefully get to share value with you guys. So feel welcome. And before I make any progress, I would like to do a mic test. So if you can hear me clearly, type hi on the live comment section, and this will confirm that everything is working just fine. So as already mentioned, in today's presentation, we'll be focusing on market pulse. The key topic for today is trading Brent oil. And this is basically the crude oil traded in the UK. So in the presentation, we'll be covering some of the following topics. One, we look at how to trade Brent oil, practical guide, how you actually do it. Two, you'll be looking at where to find information about oil. We'll be looking at the news about oil as well as market analysis about oil. Three, we'll be looking at technical analysis of Brent oil. We're trying to understand the trend, the potential price movement, the key price levels, and potential direction. Then we'll look at the role of OPEC Plus and Russia in oil markets. And after we do this, we cover the oil outlook for Q4 in 2022 before we end the session. So by the end of this session, you'll be able to understand how to trade oil, where to get information. You should have an understanding of what has been happening in the oil markets, where the oil markets are headed, and also where to find information and how to digest that information to your own advantage, especially if you are an oil markets trader. So I'm still waiting for your responses. Oh, awesome. I wasn't getting this. I can access these. Hi, Charles. Hi, Joseph. Hi, Dennis. Hi, Benson. Good responses. Hi, Owen. Hi, Grant. Awesome. What's the direction of pound USD? Good question. Hello, Emperor Traders. Hello, Emmanuel. Hello, Charles. Thank you, guys. Output cuts. What to ngoja rates. This is good stuff. Let's get this session started and start moving right away. So as I mentioned, we'll start with the basics, how to trade Brent oil. So if you have not started your trading journey yet, then you should probably head straight to the Novice to Pro series on the FX Pesa YouTube channel. Then from there, go through all the basics. So you learn the introduction to trading, you learn the introduction to candlesticks, drawing your trend lines, doing your basic analysis and all that. So most of the beginner stuff is already available in the Novice to Pro session. So if you have not gone through the beginner stuff, then you should probably start there. So for now, I'll be starting with some very simple stuff. So this is the chart of US oil. So I'm focusing today on Brent oil. So this is a UK oil on the MetaTrader 5 trading application. So as you can see, it has been quite a crazy day. So if I try and remove these other sections here, you'll notice that the markets were largely quiet since yesterday in the afternoon. they kept on trading sideways for quite a while before the big announcements in the US CPI, Consumer Price Index, where the price shot all the way down. So this was when the news was announced. So this happened at 3:30 p.m. and then immediately the market reversed and price shot all the way up before pulling back down, and this is the current price. So as you can see, oil is quoted in 3 decimal points. So the current price is 93.429 US dollars per barrel. So when you're trading oil, you should know that the product is leveraged, meaning that you trade this particular product with leverage. So as a simple guide, if you want to execute a position in oil, you basically go to the new order section here. Then from the new order section, you select the amount of barrels that you would like to trade. So for instance, if you trade one full contract, then you should know that one full contract will have 100,000 barrels in it. So if you, sorry, not 100,000, but 1,000 barrels. This is indicated right here. So the price you see here is the price of 1 barrel. So 1 barrel of oil, that is Brent oil, is going for 93.438 US dollars per barrel. So if you trade a full contract, let's say you are going for a buy trade, then you will be buying 1,000 barrels. On the other hand, if you look at the minimum you can trade, which is 0.01 of a contract or 1% of a contract, then in this case, you'll be trading 10 barrels. So if 1 barrel is going for $93, then if let's say you go for a buy trade, you will be buying 10 barrels, and this will cost you about $934. So in this case, if you're trading with leverage, the maximum leverage you get with FX Pesa is 400:1. So let's see what kind of leverage you get here. So you simply execute your buy trade. And now we know that the position size is equivalent to $900. So you can see that the margin requirement is a very small amount, 4.68. So this basically means that you're basically getting 400. 400:1 leverage. So instead of providing $900 for the position, you only provide 4.68, and the broker provides the rest of the money through what we basically described as leverage. So you're trading on borrowed cash. This basically means that if you hold on to the position past midnight, then you will attract a swap fee. So the swap fee can either be positive or negative, so you can always confirm from the market watch section here. So in this case, we are looking at UK oil. So let's do this. This is UK oil. You can always right click, go to the specification section, and then from here you can check on the swap. So the swap is a very small amount when you are on the positive side. It is negative 0.45. This is in points. So notice that the swap is in points. So this would be negative 0.45 points. So clearly, if 1 point is equivalent to 0.01 of a dollar, then this would be 0.045 for the minimum contract. On the other hand, if you have a short selling position, then it's a little bit expensive. Remember, swap rates are adjusted from time to time. So you have to keep on checking the swap rate from time to time to know the swaps that apply to your trade. So in this case, it's a negative 59.545. So if you are executing the minimum trade, which is 0.01, and you hold on to that trade past midnight, then you attract a swap of negative 59 points. And this basically applies to when you have a short selling position. So in this case, I would be looking for buying position in oil because they attract the lower swap. So in this case, if I'm holding onto the position for a long period of time, then I would prefer a buy position rather than a short selling position. So that being mentioned, we have seen how you execute a trade in oil. The margin requirement is here, $4.68 for the minimum trade, which is 0.01. Basically means that if you are trading a full contract, then you would be required to have around $468 in your account. So setting a stop loss is simple. You click, hold, and drag. For instance, if you want to risk $30, you can set it here. This would be $30. And then at take profit, you do the same. Click, hold, and drag. In this case, to the upper side. And that's our take profit of $41. So a very simple way of executing a trade in oil, setting a stop loss as well as your take profit. And now that that's it done, we can move on to the next part. So now I'm hoping everyone, especially if you're very new to this, you understand how to basically execute a trade in oil, you understand the swap fees, you also understand the way to execute a trade. So at the same time, you should know that FX Pesa will charge you a commission every time you execute a trade. The commission is a very small amount. This is 0.7 pips. So basically, the very first 7 points will go towards paying commission. So if I convert my profit here, right click, go to profit, then select points, then out of the 128 points, then I should be paying an extra 7 points towards the commission for the trade. So that's how the company benefits. So every time you execute a trade, the company will benefit by charging you a very small commission. At the same time, you get very competitive prices right from the markets. So if you have any questions arising from the presentation, feel free to type those questions. I will not be addressing any questions that are not related to the oil markets. So make sure that the questions are anchored around the current topic. And today's topic is how to trade the Brent oil and topics around Brent. So there was a mention of output cuts. We'll be focusing on that too. So it will be a very quick session, fire session. So try to catch up. If you are not able to catch up, there will be a recording available on YouTube. So you can always go back and rewatch the session, try to grab some points and hopefully get to grab some value from this particular session. So that being mentioned, our number 2 on our slider, after how to trade Brent oil, is where to find information about oil. And this is a very important or critical part of the presentation today. So whenever you're trading oil, you know that there is various factors that influence the movement of oil. So for price is clearly available on the MT5, that is the MetaTrader 5 trading application. But then know that there are factors that will influence the demand for oil, and also there is factors that will influence the demand for, the supply for oil. So on the supply side, know that there are countries that produce and export oil. And one of the biggest organizations that is in direct control of oil prices is called the OPEC Plus organization. So in short, it's basically the oil producing and exporting countries combined together into one cartel that they use to determine the oil prices. So quick overview here. So I'll just go to the OPEC website. So the member countries, or the number of countries in the OPEC cartel, is 1, we have Algeria, which is an African country. 2 is Angola, which is also an African country. We have Congo. This is Central Congo. Then we have Equatorial Guinea. We have Gabon. We have Iran. We have Iraq, Kuwait, Libya, Nigeria, Saudi Arabia, United Arab Emirates or UAE, and also Venezuela. So these countries combined together, they basically provide representation in the OPEC countries, and also they vote for their own de facto leader. So currently the de facto leader for the OPEC countries is Saudi Arabia. So whenever we are looking at the OPEC Plus countries and the decisions they are making, we majorly focus on Saudi Arabia, which is a big producer as well as an exporter of oil. So the OPEC Plus countries export a lot of oil in the global markets. And whenever they adjust the supply or the output that they make in the markets, then these tends to have a direct influence on the price of oil. So for instance, if you look at their mandate, which is pretty simple, the OPEC's objective is to coordinate and unify petroleum policies among member countries in order to secure fair and stable prices for petroleum producers, and efficient economic and regular supply of petroleum to consuming nations, and a fair return on capital to those investing in the industry. So whenever you hear of a cartel, we all know that cartels work with one simple goal, and this is a self-sustainability. They want to be self-sufficient. They want to have a positive outcome from their shared interest. So they all produce oil, but they want to sell oil in an organized way to make sure that they don't work against each other. So by combining their efforts together and making a unified decision on oil output, then they're able to stabilize the market and make sure that there is a sufficient market for their product, as well as a good price that basically gives them sufficient revenue that they use in their economies. Some of these economies are largely dependent on the export of oil in order to finance their own budgets as well as economic activities. So, for instance, if you look at an economy like Nigeria, it's heavily dependent on the price of oil. So, if the price of oil is down and they're exporting oil, then at some point they may even be unable to finance their budget, as was the case in the beginning of the pandemic around April 2020. The price of oil had crashed as a result of the crash of demand. So in that case, it was a big thing. It affected them negatively, but through OPEC, they were able to combine efforts, lower their output, and eventually they manipulated prices to the upper side, and they were able to finance their local budgets through such an arrangement with the cartel. So it was a very interesting thing. So if you want to read the history of the OPEC Plus countries, I'll be sharing these, but you can go through it at your own time. So hopefully you'll be able to see the link that I just shared. Sorry for that. So I'll try and share on the live chat. So hopefully everyone can get that. So just a moment, trying to get this fixed. Awesome. I can confirm now that I see it right away. So here's the history right from the 1980s, 1990s, the 2000s, 2010, and the most recent update here is 2020. So I'll be doing a quick read here. You should know that the OPEC Plus cartel is now 60 years old, turned 60 in September. So the new decade, we witnessed an unprecedented beginning with the outbreak of COVID-19 pandemic, pervading almost every aspect of daily lives. The pandemic had a detrimental impact on both the world economy and the energy sector, pressuring nations to take necessary firm measures to slow the spread of the virus and counter its effects. So the oil market saw demand in free fall, basically meaning that demand was continuously going down. Global storage filling quickly and large-scale volatility. This propelled the OPEC and its partners in the declaration of cooperation to intensify their collaborative efforts to restore much-needed stability, resulting in the largest and longest voluntary production adjustments in the oil market's history. The importance of these efforts was recognized by numerous countries and organizations, including the G20 energy ministers, also Argentina, Brazil, Canada, Colombia, Norway, and the African Petroleum Producers Organization, the International Energy Agency, the International Energy Forum, and many independent producers. So it was a big turning point for the OPEC cartel, and also they saw a new level of collaboration that has worked so well for them that we have enjoyed a very strong bull market right from April 2020 up to the current date. So oil markets have been largely bullish, and also if you look at the oil stocks, they have been one of the best performing stocks since the beginning of this year, despite the entire global economies being in a bear market. So that's it about the OPEC countries. So if you need to know more information about the OPEC and their operations, their meetings, then you can always use the website and the link I've shared to get more information about it. So where else do we get information about oil? There's a very common website that I normally use. It's basically called oilprice.com. So it's the #1 source for oil and energy news, according to them. I don't think it's objective, but we'll take it. So you can see that they track quite a number of markets, right, from WTI. WTI is West Texas Intermediate, or basically US crude oil. Brent crude oil is UK. We have Morban crude oil, and also natural gas. So you're able to track the live prices from here. So at the same time, you can see the discussion and headlines. Energy Armageddon, this was 4 minutes ago. How to calculate your individual ESG score to ensure what Europe's energy crisis has ended its era of abundance. So all these new updates or live updates of what's happening in the oil markets are available in the oilprice.com website. So I'm not promoting the website. I'm just telling you that this is highly educative. You can grab a lot of content from here. So if you need resources where you can get information about oil, then this is probably one of them. So the most recent article that I was reading here was written by a Kenyan, Alex Kimani. So from here, you can see OPEC price conduction cut in luring hedge funds back to the oil market. So a very interesting article about what has been happening to oil market in the recent past. So I'll be sharing the link with you too, so that whenever you have time, you can go through the link and understand what is happening. And also you are encouraged to cover more ground on the same. So besides the oil price website, there's also Reuters. Reuters has a lot of content about financial markets. So I would suggest you just, if you're looking for oil or information about oil, you go to reuters.com/markets/commodities. From this link, you're able to see market updates about commodities. Oil being a commodity, you'll get a lot of updates from there. So clearly, you can see it tracks quite a large number of commodities. They are classified as agricultural, energy, commodities, livestock, and metals. So in this case, we are focused on energy. So you simply click on energy. You'll get the NYMEX crude oil, ICE right here, Brent crude, NYMEX RBOG gasoline, ICE gas oil, NYMEX number 2 heating oil, and also natural gas. So in this case, today's focus is on Brent crude, which is basically up 2.25% in the last 24 hours. So as you scroll further down, you can see the market performance for currencies, rates, and bonds, as well as stocks, and the page ends here. So if you want further information, in this case, you are looking at Brent crude oil. You can click on it. So from here, where you have Brent crude oil, you can see the most recent article in the market. And as you scroll further, you get more information about what's happening in the oil markets. So you also get a live price quote and also a live chart of what's happening in the markets. And these will help you grab an understanding of what's happening and use that to your advantage. So still on the resources, I would like to now redirect you to the FinViz website. So from the FinViz website, you can get data aggregation of all that's happening in the markets. So this is not specifically focused on oil, but all financial markets. So from these, you can see the most recent articles on the internet. That is the financial world, focusing on what's happening in the markets. So if it's something about oil or some news about oil, then you most definitely find it here on the FinViz aggregator. So a very quick way of scanning the markets, knowing what's happening by just looking at the headlines in the markets and understanding what's moving where and when. So for instance, if you look at the most recent article, this is by MarketWatch, the mood has turned darker, desperate to outrun inflation. People are making big and easy changes to their habits. You can too. So this is an article where if you click on it, then it will redirect you to the website and you get to read more about that. So the last resource I will be showing you, I don't think this is the last, so there's one more. These are the Forex Factory website. We have a special branch focusing on energy. So if you go to Forex Factory, I'll try and show you this right away. This is the Forex Factory website. So if you click on the menu, just move your cursor to the menu, you'll see a new website for metals, mine, energy, EXCH, and also crypto draft. So just click on energy, and this will redirect you to all news that are affecting the oil markets. So you can see there's WTI, which is US oil, Brent oil, natural gas, heat oil, gasoline, Brent WTI, and also WTI gasoline. So here you'll see the most recent or the latest stories about oil. Europe's gas prices retreat, storage almost full. Biden administration asked Saudi Arabia to postpone its OPEC decision by a month. So all this information is available here. You can always go to the website and you get the most recent news about oil from that particular site. So I'll be sharing that link live again so that when you need it, you can always grab it there. So lastly is CNBC oil. This is pretty straightforward. So from CNBC oil, you'll get the most recent commentary, market commentary, articles, as well as videos about what's happening in the oil markets. So for instance, the most recent article, which was published 7 minutes ago, Biden administration asked Saudi Arabia to postpone OPEC decision by a month, and this was mentioned by the Saudis. So basically what's happening is that the US has been subsidizing oil in the markets by drawing from their strategic oil reserves. So by raising supply, they have been pressuring the oil prices towards the lower side in order to maintain low oil prices, control inflation, especially considering that they are going towards an election, and this should be happening in November. So when the election happens, then in that case, perhaps the strategic oil reserves will have run out. So that's why they are probably begging Saudi Arabia to get more supplies, keep the prices low so that they can have a positive impact from the elections. So it's a similar tactic like what we are having here in Kenya. Before the elections, they had lowered the price of unga. There was incentives on the price of petrol, and this was designed to make sure that people feel confident about the economy and they vote the current administration. So a similar tactic is being applied in the US right now. So that being mentioned, it takes us to the next part of today's presentation, and this is a technical analysis of the oil markets. So let's do this right away. So I'll be doing this. Remember, it's one chart today. That's UK oil, or what you call the Brent. So clearly, you can see that it's on a very strong momentum for the last couple of hours. So you can always use this particular tool, the crosshair, to measure the number of pips as well as the percentage. So from today's bottom, oil is up almost 4%. This is the 3.99%, up 3,610 points. So this is quite impressive for the oil markets, especially considering that the most recent data of inflation was higher than expected at 8.2%, basically expecting that the Fed will raise interest rates by a bigger number, and this is expected to strengthen the dollar. However, on the counter, seems like the move was very short-lived, and the market has rebounded strongly and seems to be continuing to push higher. So when you talk about technical analysis, there's something that I always try to do, and this is by focusing on the past, trying to understand the history of the asset before trading its current price. So let's start with 2020. I think this was a major shifting movement. So January 2020, the price of oil was trading somewhere around here. So this was the price at the beginning of the pandemic year, somewhere around here. That is $70 per barrel. So immediately after the announcement of COVID, you can see that the price managed to crash strongly, so all the way down. So at this period, there was a price war between Russia and OPEC, where they were all trying to manipulate the market by pumping more and more oil in the market, and this drove the prices all the way down. So in this case, it was down by about 72.20%. So if you look at the lowest prices that we managed to see in April 2020, 1 barrel of oil was trading at about $19. So since then, notice after they changed and stopped the price war. Remember, the price war was targeted at American shale companies that were destroying the market. So they were trying to bankrupt them because most of them were leveraged. So in this case, by flooding the markets, a lot of shale companies in the US were losing a lot of money. So since the bottom here, you notice that there was a very strong recovery lasting through the entire year. So as we got to January 2021, you'll notice that the price was on an upwards trajectory. So since the end of the year here, we had almost 70% recovery. So thinking about the recovery from this bottom here, this area here, then the following year, price opens here and continues pushing higher. That is our last year. So we saw the price move all the way up to December. So I just want to see the beginning of this year. Awesome. So from here, notice that the price continued rallying and went all the way up before pulling back down and then crossed here towards the end of the year. So clearly, a very, very strong bull market that can be identified. Let's say we connect this low, and then also this low. And then if we extend this way, then you'll notice that the market continued to move up strongly. Then from the upper side, we had some resistance. So clearly, it seems like the oil markets were following some path somewhere along this channel. So a very strong momentum towards the upper side. So clearly, since that particular period of time, look at the movements up, down, and then the beginning of this year. So as the markets were going up, then we got to a very important movement. And this particular movement is when Russia decided to invade Ukraine. So when this happened, you'll notice that there was a very strong rise in the price of oil, where oil jumped from relatively $100 per barrel to a high that we have not seen before, which is $131 per barrel. So this was as a result of the panic. So we knew that the Eurozone would basically apply sanctions on Russia for doing so. And by applying sanctions, then Russia would also sanction Europe back by basically cutting oil supply. So about 40% of the gas that is consumed in the Eurozone comes from Russia. And also a similar quantity of oil also comes from Russia. So Russia has been cutting or disrupting supply in Europe since then. And this has maintained oil prices at very high levels. So you should know that the average cost of producing oil in the global financial markets is about $40 per barrel. So any price above $40 per barrel basically means profits for the oil producing countries. So if you look at the price level here at 131, then it basically means that the company selling oil were making up to $90 per barrel, and this was crazy profits. So oil prices moved back down to an anchor somewhere around $100 per barrel. So $100 per barrel used to be an anchor this year for quite a period of time, where clearly you can see market goes slightly below 100 and then back up. Does the same. So let's highlight this line here at 100. So I'll just change the color to something different. So then make it a little bit thicker. So this is blue. So market pulls back down, gets to 100, bounces, 100 bounces, 100 bounces. And this has been quite a big story for this year. So notice that the first time the price started breaking towards the lower side. Here it was around July. So the market attempted playing around 100 for a while. Then August did the same. And then last month, which is September, this was when we had the big break. There was a very strong rally in the Nasdaq. The dollar was very strong. The price broke towards the lower side. So we saw a very strong momentum towards the lower side until the price bounced at 82, and this was last month. So since then, we have seen a very strong rally from this 82 price level. So notice it was a very strong technical pattern happening here. So there was a very strong support here. So just draw a line. So I hope that my lines don't overcomplicate the narrative. So another trend line here, and clearly you can see that since this particular high in June, market was going down and then finding a bottom along this trend line, up and then down and then up, down, see up until this bottom here. So clearly, as you can see, the market was still within the channel, and the key deciding moment for the change in trend seems to have happened last week. So last week, the price managed to break the upper trend line here, went all the way up and hit this other trend line. that was very strong, running all the way back to 2020. So from the daily chart, remember we had this trend line marking the April 2020 low. So it's a multi-year low that was consistently holding here. So since it was broken, price continued pushing back down. But then it seems like the market has entered a new territory, trying to move towards the upper side. So if you look at the 4-hour chart and you look at this recent high that we saw here, and this was the end of last week as well as beginning of this week, it seems to be significantly higher than this particular high here that we saw on this upswing. So at the same time, if you look at the most recent bottom here, from this bottom, the bottom that we are seeing today happening here, seems like the market is now attempting to form highs that are getting significantly higher and also lows that are getting significantly higher. So it seems like a potential change in the trend of the oil markets, and potentially we could see the prices start to move towards the upper side. So judging by that, then we can look at the most recent news that we have experienced. So one of the news that we have experienced is that in the most recent meeting, remember the OPEC Plus countries will do a meeting each and every month, one meeting a month. And in this meeting, they will discuss the oil market outlook, what they are seeing as the potential demand and supply side. So they know that the global economy is going down. Remember, the consumption of oil is majorly done in manufacturing. So if manufacturing is slowing down, then demand is going down, and this tends to have a negative effect on the price of oil. So the only way that they maintain oil prices at these premium levels and continue enjoying good profits is by manipulating the supply side. So they decided to cut oil production by 2 million barrels per day, and this is designed to continue pushing the prices higher. So as you can see, since doing that last week, there was a slight crash, but today seems like a very significant bounce, and we could see oil prices continuing to push higher, perhaps towards the previous high of around $97, or even the anchor price level that I mentioned as $100 per barrel. So potentially, what we are looking at is a slowing demand, which is basically slowing the price of oil towards the lower side, but also a slowing supply side. So by slowing supply side, basically means that oil is a little bit more scarce, and this basically implies that pressure would be on the upper side. So as long as economies continue operating well and expanding production, then oil output cut should have a direct effect of pushing the prices towards the upper side. So this pullback may have been a very significant entry for buyers to push the prices back up towards the upper side. So if you look at a smaller time frame, and now we're in the 15-minute chart. So notice how we have moved all the way from the daily chart down to the 15-minute chart. Then you notice that there's a very common technical pattern here, where price has been consistently moving towards the lower side. So if you look at these two, price was consistently moving downwards in what looks like a pennant or some form of flag. And now the breakout happened early in the day after the news, where price dropped down, bounced back up and broke the upper trend line. So since then, we have seen a very strong acceleration, and I am expecting this particular momentum perhaps continue towards the end of the week. So most direct target, if you're already in the trade, seems like the previous high here, and this was yesterday's high. So perhaps price could test yesterday's high and find resistance and move a little bit backwards. But then if it continues all the way up, then there is that potential that oil prices could move all the way back to $97 per barrel. However, if yesterday's high manages to be the resistance here, then there is a potential that the price could drop all the way back down or simply just back to the breaking point. So if price goes back down, then this area where it broke the upper trend line will also be a significant area to observe. So that being mentioned, I'll be looking at the questions if you have any and try to respond to those questions as best as I can. So before I do this, also mentioned that there is an outlook for Q4. So as we head towards the Christmas season, we know that the economy of the US is indicating some weakness, some contractions. We have seen this happening in the earnings. Also, the economy of the UK is also experiencing something similar. And if this kind of trend continues, then there is that potential that the slowdown could affect oil prices. So my outlook for the rest of the year is that potentially we maintain the same trend. So the same long-term trend that you've been experiencing here could be maintained. So as much as we see prices continuing to push towards the upper side and attempting to break this level, I still think the resistance is quite a significant area. So as price keeps on pressuring towards the upper side, in this case, pushing towards the previous high. So if I adjust my trend line here, basically reflect this high here, and I do this, then there's that potential that the price could get to 95, 96, or even $97 price level. But I'm not very hopeful that the oil prices will skyrocket the same way they did. So a lot of countries are trying to look for alternative ways to survive and to get energy that they are no longer getting from the supply that was coming from Russia. So as soon as they find alternative ways of getting energy, be it nuclear or clean energy such as solar and wind, I expect oil prices to maintain the same level. So yes, the OPEC Plus countries are trying to push the prices towards the upper side, but demand is not serving them well because the monetary policies we're experiencing, which are basically suppressing demand in the economies, are also suppressing demand for oil, and this is not looking good. So on one side, we have countries producing oil trying to maintain high prices, and also countries raising interest rates trying to kill demand, and these may have a sideways effect on the price of oil. So the current range seems very interesting. The previous high of last week and the low of this week are right here. So I expect some sideways momentum from here. Nothing fast stretched towards the upper side and nothing fast stretched towards the lower side. However, on the contrary, it's also pending to some future meetings between the OPEC Plus countries. So if they decide to cut the oil production further, then potentially oil prices will be headed back to 100 and higher. So a very interesting perspective in UK oil. So if they do another output cut, then prices could resume a bullish trend. However, if they maintain the same and demand continues to slow down, then this particular channel towards the lower side will be the prevailing market pattern. So that being said, let's check on the questions. If you have any questions from the session, this is the right time to ask. Any questions? Hello? So, good question. What of gold and also the stocks for Alibaba and Amazon as we are heading to Christmas? So, a very good question from David. I mentioned that I will not be responding to questions that are not related to oil. However, I will be doing quite a response here. So, one of the most recent questions from Annette is, what is your view on gold long term? So, gold is a rare commodity. It's hard to find, it's hard to produce, it's expensive, and it tends to retain value over time. So gold has been retaining value for over 5,000 years, and I expect it to continue retaining value. So right now, what we're experiencing is that we are in a period of time where the US is tightening monetary policy faster than any other top level economy. And this is basically crashing other economies. So we have seen the US dollar strengthen against the pound, against the euro, consistently against the Australian dollar, the New Zealand dollar, and all these other major pairs. So at some point, once the inflation is under control, we'll be expecting the US to reverse the monetary policy direction. And once it does that, it will be basically printing more cash, thereby devaluating the currency. And in that case, investors could shield themselves from such by basically buying more gold. So as for now, I expect gold to continue in the current bearish trend. And once the monetary policy direction is reversed, then in that case, we start seeing gold move towards the upper side. So clearly, from the daily chart, you can see it has been quite a consistent bearish momentum. So at some point, once the US dollar stops acting as the safe haven, then in that case, you'll start seeing gold break towards the upper side. So the upper trend line here is very, very important. I'll be focusing on these, especially in the next quarter, that is towards January 2023. So as for stocks, Alibaba and Amazon, Alibaba took a big hit from the Chinese regulation, so still yet to recover. Amazon has also been taking a very big hit from the Federal Reserve monetary policy. So a lot of tech stocks in the US have been going down. I don't think it's the time to be positive about it. So we might have to wait a little bit longer until the Fed is done with the rate hikes. So if you just go to the maps here, in this website, I'll try and share these. So forget today's performance. I want you to take a longer term look. You look at the year-to-date performance. This is the performance of US 500 stocks since the beginning of the year. Clearly, companies like Microsoft are down 32%, Google 32%, Amazon down 32.8%, with the only best performing companies in the energy sector, with ExxonMobil up 60%, Chevron 34%, ConocoPhillips 65%, and Occidental being 124.59% up since the beginning of the year. So clearly, with this trend, if the Fed continues hiking interest rates, then these tech stocks are expected to weaken further. So in this case, I'm not very positive about them, despite there being Black Friday on November and also the Christmas period. I'm still expecting the tech stocks to continue weakening until something fundamentally changes. Do you still expect the dollar to continue going up? Yes, I expect this to happen. So today there was a lot of volatility. You might think that maybe you are wrong, you don't understand the fundamentals. No, sometimes the reaction from the news in the market tends to be the exact opposite, but eventually the dollar will be gaining its strength and it will be continuing to see some strong dollar, especially as the Fed continues hiking interest rates. So don't be worried about today's weakness in the dollar. At some point, we will be seeing the dollar resume its strength, and this is when we get to make money. So thank you very much, guys. Thank you for your time. Thank you for your questions and for your participation. I hope to see you on the next session. Remember, the sessions have shifted. Now we are doing a session on Tuesday at 4 p.m. and another session on Thursday at 8 p.m. Make sure that you set a reminder for the next space such that we get to share these lessons and add some value. So thank you, Wanda Kid. Thank you, Annette. Thank you, guys. Hope to see you on the next session.